Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for one wild trading day today, Wednesday, the 18th of December, 2024, about 7:10 p.m. at night. So, going into the Fed meeting, what was the market looking for? You heard the terms, not from me, but you heard hawkish cut, coined on probably CNBC. That's what I heard. Everybody picked up on that. So it meant a rate cut that the Fed probably doesn't want to make, and they'll talk tough afterwards. Okay. How many rate cuts was the market looking for in the dot plot? Including today, most traders were looking for 2 more, maybe 3. Okay. What did the Fed deliver? It made a rate cut of 25 basis points. It got even more aggressive with the discount rate for 30 basis points. What else did it do? The dot plot came out, points to 2 rate cuts. So why did the market collapse? And that's the right word. It collapsed today. And that's because the market got what it wanted, and it feared that it would get that. That's the only way that you can describe it. Did the press conference go well? I would rate it an F. A terrible press conference. Nobody gave a straight answer. Why did you have to make the cut? The Fed chair kept talking about inflation pressures and gave us the impression that they have swung around to more attention to inflation than to labor. So we've gone from inflation, then we're going to pay attention to labor, then we're back to inflation, and he brings up that it's a dual mandate still. Well, the simple fact is they shouldn't have made the cut. That simple. Otherwise, the whole meeting should have been why the cut was made and why the market needed the cut. I walked away thinking, why did they make the cut? And you have to ask that too. I mean, if they made the cut and inflation's sticky and the members are leaning to only 2 more cuts, remember, we went into this thinking we'd go to 3%. That's not the case. When asked the question, what is the neutral rate, he chuckled, as he should, because he doesn't know. Nobody knows. This is a moving target. What's evident is the economy is much stronger than the Fed thought it would be. The labor is stronger, and inflation is stickier than they thought it would be. You have restrictive interest rates. And Steve Leisman, I think, brought up, why did you drop the word restrictive if yet you want to keep interest rates this high? To me, the answer made no sense. All right, and I think that's what the market kept looking at, not from Steve's question, but the whole conference. So I rated this one. Normally I give them B's and A's and A pluses. This was a failure one from my perspective. Now, we fell so much it's not uncommon to get a bounce. That's what you're getting. In the metals, the reason you're down so much is they settle the market at 12:30 p.m. Central Time. The conference doesn't begin until 1. The press conference doesn't begin, well, the statement comes out at 1, the press conference at 1:30. These markets were not open, and now they're catching up with where the markets were. They trade till 4 p.m. Central Time, and they went back to where they were. The currency markets settle at 2, so they had to adjust to where they're at and the settlement. And they did a pretty good job of that, by the way. The energies were overpriced at settlement because the markets were falling and they're back in line. And natural gas is staying strong for one reason. That severe weather that's coming in from Canada that's hurting the market. As for the bonds and notes, they soared, but now the 2-year is saying, hold on. Maybe this curve yield, we should go back where this stays and the other parts are adding the yield back to tradition. So I see that is taking place. Bitcoin is just earlier this week was 108,000. You're back to 100,000. So an 8% plus drop in the market. Wow. So you're getting those type of moves. Are you going to be a hero tonight and try to gobble up some? There are traders that will do. I find that on days like this, I wait for the yin-yang impact to occur. What is yin-yang? If we come out at 1 o'clock, and I'm talking our Fed, Central Time, 2 Eastern, what time's it in Asia? They're sleeping. So they wake up and they react to it. Europeans, if we come out at 1, 2 Eastern, what time's in Europe? Most of those people are with their families doing whatever. So you get this going around the world, and it softens or worsens the situation. Let the yin-yang happen, and by the morning, the dust will, as I like to call it, should be much more settled, and that's when you take looks at the market. You may agree with that, may not, but that's what I've learned in my 5+, almost 6 decades of trading, being a broker. Weekly jobless claims at 7:30. Final look at the third quarter GDP. Doesn't mean diddly. The Philly Fed Regional Business Activity Index will come out at 7:30. National Association of Realtors will come out with November numbers. We've seen all the homeowners and XHB and the ETF sinking like that. All right? You're at 7.13% tonight on fixed rate mortgages on average. You think you're getting a lot of new buyers with that? I don't. The Conference Board's going to release their monthly leading, coincident, and lagging indicators at 9. The Bank of England, what are they going to do with this? The pound got hit today, as you'll see in a moment here, and that's because the dollar just reigned supreme on everything. And the U.S. budget deal, as Trump and Musk said, it's nixed. We may see a government shutdown this weekend. Yeah. Forget the pork the way it used to be. This is no longer going to be as Congress likes to write it up. You have a president that can't run again. You have a man that you've already taken to court and found him guilty on as many things as you can, and he's up and standing, and now he's got the richest guy in the world as his Robin. Think of him as Batman and Robin, and they're coming out and going, well, we're not going to do that. And Vance is in the background, sort of the butler right now, making sure that it's all served up. And that's what he should be doing. He is the VP. Let these guys do their game. And that's what's pretty much going on. All right? Okay. So let's take a look, if we could, at the S&P. It still hasn't come back to the 18-week moving average. It could. It's done that on deeper corrections before. So that part can still happen. We fell apart. This is what you're looking at. Completely fell apart. So even as a fourth grader in school, oh, that should be a top. Oh, yeah, that stopped the market or whatever. Pretty simple. So a trade top of sorts is in place, and it even matches up as you've got lower highs, lower lows. Does that mean the Santa Claus rally can't happen? Absolutely not. But the rally doesn't have to go back up to new highs. The idea is the non-traditional kicks in on December 17th, ends on Jan 12th. It has worked in the S&P 14 out of 15 years. It's not infallible. If you followed the NASDAQ, it's worked 13 out of 15 years, the same time frame. The traditional Santa rally happens the day after Christmas and goes to January 2nd. So this break favors that you're going to get a bounce back. How big, I don't know. And we don't even know what the true Santa Claus, the traditional one, will do because we're not at those dates yet. Okay. The market just slid through everything. It had stopped at the 18-day average and let go. So where does that put it? Well, you're under the Bollinger Band by a lot. You could be going to the 100-day average. But where are you in momentum? You're already oversold. So those that have to bail and panic will do so. Will we get the year-end window dressing of portfolios for tax reasons and the like? We will. Has the bull market for the moment ended? It has. Has a bear market short-term developed? It has. And it is instantly oversold. When we come to the NASDAQ, it just pulled the plug on everything. Now, it's not as bad as the S&P. You're not through prior lows or anything like that. You lost your embedded reading and you've already hit your target. So there could be more rebuilding here. This is still the good looking of everything. The Dow, 10 days in a row down. We haven't seen that since 1974. Every single day's got a lower low. It's hard to believe that it's done that, but notice where it's trying to stop. You do see the green line, that's the 100-day average. You do see you're oversold. I'm not a bottom picker. Rather, if you were short, I'd be screaming at you. You're at the Bollinger Band range and you got that extra. I would be taking something off the table. In the Russell, those that have been trying, and I keep hearing it on TV, let's buy the Russell. Well, I've got to tell you, it's one of the worst performing of the indices for the year, and it followed through on the downside here. So, whatever. I thought it would hold better at the Bollinger Band 100-day average, but this could just be slippage. We'll see tomorrow if, in fact, it can do that. Then we get to the 10-year notes. It's reminding me of the Dow. Every day's a lower low. Nobody's mentioning this. I mean, this is a big run streak to the downside. The 5-year, not the same, but you had an outside day down today. You tried to rally, you couldn't do it, and now you're back to the Bollinger Band. Wow. Do I think these markets are just going to mount from here, another big decline? I don't. All right, I'll say that to you. No. I pay attention to those bands and overbought, oversold signals. In the dollar, you're up and over the upper band. You generally pull back within. You're already overbought, nowhere near embedding. We'll see what that does. In the euro, you just crushed the euro today. Absolutely crushed it, because 57% of the dollar index is comprised of this. So they flip on each other, and that's what went on. Oversold. To me, overdone. I certainly wouldn't be telling people to go short there. And we got a decisive move in the pound. Remember, we were just saying, how is it going to fight its battle at the 18-day average? And that's what it's been doing. Well, let go. I think that 125.37 is certainly a cover short area in the market. And you don't know what the bank's going to do tomorrow, so we'll find that out. Bitcoin, as I said, you had just been up almost to the 109,000. I said 108. It's just shy of 109. You had gotten up specifically to 108,970. So I was $30 away from 109,000, and you're knocking on the door now of 99.6. It's not uncommon to get big reactions in this market that end up being buys. So this could be where that happens, but notice the number it happened to again. I realize there's a number of people out there that go, I don't believe in that Bollinger Band stuff. Well, I appreciate that you don't, and I like you not to. We need somebody at the other side of the trade. In the crude oil, you got higher highs and possibly lower lows. The market's been fighting a battle between the upper Bollinger Band and the first challenge of the 100-day average. Now, it's interesting. You're down, but not a lot, and yet crude oil's priced in dollars. We'll see what happens. I hope you pay attention also to the fact that the UK just launched a bunch of new sanctions on the shadow fleet that Russia uses. So by doing so, they're trying to shut down the monies that Russia gets. Why the U.S. isn't joining in with that, I would like to know. When we take a look at WTI, doing pretty much what the Brent did. It's fighting at the 100-day average up to the upper Bollinger Band and overbought. Heating oil fighting at the 100-day average, overbought in an uptrend still. Natural gas, well, this was the latest rally. And again, you pay attention to the first times you hit those 100-day averages. Now, the cold weather is built into this market right now. So we'll see if the cold weather develops as bad as it is. They just told us in Chicago to get ready for our new weather. And you know what they're telling us? Christmas is going to be 40 degrees. Come to Chicago. I mean, if you're going to want to chill, and we're going to have right after that the outdoor hockey with the Hawks and all in Cubs Field. Come on in. All right. My complete futures research. I'm going to be writing, and I did tonight, this is why I'm late, a lot on today's events. And that's where the meat is that I do things. I write 2 market letters a day, Monday through Thursday, another one on Friday morning. That doesn't include any special reports or special buy here, sell there that I decide to have clients do. And on Sunday night, everything I do has Ways in, ways out of the market. I can't be any clearer than that. You don't have to follow them. It just tells you what I'm looking at. I cover the whole spectrum of the markets. I often look at daily and weekly charts side by side. I think it's really important. And I try to pick up, especially in the ETFs and the stocks, the long-term trades. Futures, with the violence that they have because of leverage, it's harder to do a really long-term trade. Doesn't mean you can't get yourself a good move. Just take a look at these moves, $9,000 just now in Bitcoin. But how do you play with it? Well, maybe I can offer you an idea that sets you off on the path you want. That's up to you. IraEpstein.com, research, go there at IraEpstein.com. It's all explained right on the site. I'm Ira. Hope you join with us, and I'll catch you all in the morning.